Hi, Kelly Eckholt here to update you on the key events of the week. So there's been no real progress on resolving the situation in the Straits of Hormuz. So as a result, nothing has really changed, and we're now into the 50s in terms of the number of days that flows of oil through the Straits have been stopped. That's seen oil prices remain relatively stable this week, but we are continuing to run through our buffers of oil and refined fuels. We're seeing growing signs of stress in some of the derivative fuels markets, such as diesel, jet fuel, and gas markets in particular, and there's growing concern that there are going to be downstream effects in some of the derivative markets, such as plastics, fertiliser and semiconductors. Domestically, we got some further information suggesting that the Reserve Bank is indeed exquisitely skewered here between signs of quite high inflation but also weak growth. On the inflation front, the March quarter CPI blew through even upwardly revised expectations at 3.1% for the March quarter. That shows that coming into the Iran war, we had a persistent inflation problem that the war is only going to continue to build upon. On the activity front, the quarterly survey of business opinion confirmed that business conditions are pretty fragile out there, and we've got persistent cost and pricing pressures. That confirms our view that the second quarter growth is going to be quite weak, and the jury is very much out about what happens in the second half of the year now, and frankly things don't really look that flash right now. Markets are thinking about the possibility of interest rate rises now, and there seems to be a consensus that the OCR will be going up this year. Financial markets have priced a rate rise by July, and it certainly probably looks like the case that with inflation going as high as it is, it's probably going to be unlikely that the OCR remains in the twos for very long. For our part, we continue to think that the Reserve Bank will take until September to be able to weigh up the trade-offs, but it is very likely that the OCR is going to be rising this year. We're going to be reviewing our economic forecasts in the next couple of weeks coming into the next economic overview, and I'll be looking at our interest rate forecasts in light of those. I'll be back to update you again next week.